Welcome back, Forexia fam, to day number 2 of this series of the Forex Mastery course. Today, things are going to get pretty spicy, all right? Hopefully, you guys have brought your popcorn, and hopefully you guys are ready to learn some of the most mind-bending, mind-altering, explosive content that YouTube has ever seen. So we're going to go over multi-fractal markets, fractal pairs, entry mastery, multi-time frame entry, combining confirmations, the best time frames for entry, best time frames for structure confirmation, and examples. Then we're going to move on to Hegelian dialectic, problem, reaction, solution, the structure of a story, creating emotional trauma, structure of trauma, ictg.org, and more examples. And then we're going to go on to market manipulation examples, Hegelian dialectic examples, problem, reaction, solution examples, and stop hunt examples. All right, before anything, obviously, we're going to get to the disclaimer, so go ahead and pause the video for as long as you need and read over the risk disclaimer. Remember, we are not financial advisors. Alrighty, so day 2, our number 1. We're going over multi-fractal markets, fractal pairs, entry mastery, multi-time frame entry, combining confirmations, best time frames for entry, best time frames for structure confirmation, and more examples. Before we get any further, if you guys have enjoyed these videos and you like this series and you'd like to see more, go ahead and give us a like and subscribe to our channel. We have a lot of future content coming out that has to do with all of these concepts that we're talking about in these videos. Also, feel free to join our free Telegram, t.me/Forexia2. There you can join us on our Telegram completely for free. All right, multi-fractal markets. Patterns inside patterns inside patterns. We're going to go over microcosm and macrocosm. Use different time frames to view different micro worlds within candlesticks. Fractal pairs. You will begin to notice similarities between pairs. Pairs have more correlation. Pairs which have more correlation normally have the same base pair. This can be used as confirmation when multiple pairs are correlating the same structure. Now make sure you guys are taking notes as well. So this is very important. Positive correlation pairs, Euro USD and AUD USD, USD CHF and USD JPY, AUD USD and NZD USD, Euro USD and NZD USD. These are all pairs that have a similar positive correlation, meaning that the structures across these different pairs will look very similar to each other. Negative correlation pairs or inverse correlation. Some negative correlation pairs are GBP USD and USD CHF, USD CAD and AUD JPY, USD JPY and AUD USD, GBP USD and USD JPY. What does negative correlation means? Negative correlation basically means that if GBP USD is going up, then usually USD CHF will be going down. Vice versa. And so it's the same for all of these different pairs. Rules for trading fractal correlations. This is very important. You don't want to blindly trade correlation, even though these pairs, for example, Euro USD and AUD USD, they might have the same exact structure, and you might be tempted to buy both pairs just because your analysis, they have the same analysis and they're positively correlated pairs? Well, we're going to go into why it's a bad idea to just blindly trade correlation. Correlation works in percentage. So this means that one day, two pairs can be 98% in correlation, and then the next day only be 50% in correlation. So here's an example of fractal pairs. AUD/USD and NZD/USD. We can see the similarities between these two pairs. We can see this spike down here come, Thursday. Create the low of the week. At least it looks like the low of the week for here. And then continue in this uptrend here. We see a very similar pattern here, except on Friday, it looks like Thursday, Friday, it looks like they stayed in more of a consolidation on NZD/USD, but on AUD/USD, they stayed in consolidation for a few hours, and then they broke out to the low, made that W formation off the low, and you could have had your entry on this pair. So in this example, AUD/USD gave us an entry, and NZD/USD looks like it just stayed for the most part in consolidation, didn't really give us any type of entry. And we'll elaborate on this further in the coming examples. Here's another example of AUD/USD and NZD/USD. They both have USD in their pair, meaning they'll have higher correlation. And you can see the similarities between these two pairs. They have almost identical structures. Here on Wednesday, we can see this big move here come midday, and then Wednesday here on NZD/USD, we see that same big move, very similar structure. So this was probably caused by a news event. We can see the same news event also affected NZD/USD. And here we can see the next day, Thursday, they came and broke past the low of the previous day. Same thing happened on AUD/USD, except here we can see this breakout past this low of the previous day is much more volatile. They came down quite a bit further here than they did here. That's just some things to note. So why use fractal analysis? Fractal analysis and correlation can be used to identify mirror trading opportunities and cherry pick them out. So here's an example of AUD/USD. We can see this spike to the low, and then it looks like a change in trend where they're from Thursday, Friday, and then coming into Sunday, Monday, they start shifting the trend to an uptrend. And it looks like you could have had an entry opportunity on AUD/USD the day after this spike to the lows. However, on NZD/USD, it doesn't look like there was that re-entry opportunity which presented itself on AUD/USD. So very similar structures. However, there are specific things that happen on some pairs that don't happen on other pairs, even though there is high correlation between both pairs. So, moving on to the entry mastery. In order to master your entry, we're going to be combining all of these different points here. So we're going to combine highs and lows. We're going to combine the candlestick patterns. We're going to combine structure. We're going to combine reverse price action patterns. And we're going to look for New York session entry off of London session high or low. So the highs and the lows, when we talk about highs and lows, it can be the highs and lows of the day, highs or lows of the previous day, highs or lows of the week, highs or lows of the previous week, highs or lows of the month, highs or lows of the previous month, etc., etc. Make sure you guys are taking notes. The highs and the lows are very important aspects of your trading, and we're going to want to always identify the highs and the lows, whether it be the high or the low of the day, week, previous week, month, previous month. All of these highs and lows are very valuable. Here's a macro example of an uptrend where they're making a low, a high, a higher low, and a higher high right here. If we divide these into days, we have, let's say, day 1, day 2, day 3, and this would be the high of the previous high. And day 3, they're working off of the previous high, the high of the previous day, day 2, and the high of day 1. So here is that example using real data. If this is an entire week, we can see Monday, Tuesday, Wednesday, Thursday, Friday. This right here, Tuesday, this high would be the high of the week. Coming into Wednesday, Thursday, right? Obviously on Thursday, they spiked past that high and made a new high of the week. But we're looking at Monday, Tuesday, Wednesday, and let's say we're trading on Thursday. On Thursday, we would take into consideration the high of the previous day, which is right here, and the high of the week, which is right here. And you can see price went and spiked past the high of the previous day, then went and spiked into the high of the week. And then off of those highs, they completely reversed. So similarly how this can happen on a macro scenario where we have multiple days, it can also happen more on a micro scenario where it happens all in one day. So for example, this could be Asian session consolidation and then breakout come London session. We break past the high of Asian session, inducing retail traders to start buying into this, thinking that it is an uptrend. And then London session, they completely reverse against the retail traders. Here's an example of this where we can see Asian session consolidation, and then come London session, they spike to the high, spike past the high of Asian session, inducing retail traders to buy, hitting the stop losses of any sellers that had their sells right up here, or their stop losses for their sells up here. And you can see they completely reverse. This is an example of NZD/USD on the 15-minute time frame. Highs and lows. So this would be if we're looking at this like an M formation, this would be the first leg of the M, and then the second leg would be the second leg of the M right here, breaking past this first leg high. Here's another example, but this is a micro example on the 1 minute time frame. I don't suggest trading the 1 minute time frame. This is just showing you guys that these patterns happen across all different time frames. Here's another example, but this is of GBP/USD on the 5 minute time frame. We can see a nice trend. It looks like a nice uptrend, but then it comes to a high right here for the first leg, and then that second leg a lot more volatile, breaking past the high of this previous first leg, trapping and inducing retail traders, and then in one candle, boom. In one candle, they completely shift out of this zone. Any people that bought in here, in this area, and had their stop losses down here, their stop losses were completely demolished in one candle. All right, similarly to the M or W formation, we also have the triple tap, which is kind of like an M, but it has a separate or a final push past the high of past all of the highs. Okay, so either past the high of the first leg and the second leg. So a lot of times this will happen in order to manipulate traders that are trading this type of pattern or any type of consolidation. A lot of times you will see price trending to the upside and then stays in consolidation, and it looks like it's forming a resistance right here, and then moments later, boom, they demolish that resistance, pushing through the resistance. Resistance turns support. Traders believe that it's a buy. They start buying in. They close their sells. Sells, stop losses are hit, and then what happens? That's when the sell-off happens. That's this triple tap third leg manipulation. So this previous example you could call a third leg manipulation again as well. So here we have this uptrend. We come to a high and then come to a second leg. This is a higher high, and then that third leg makes even a higher high, but this is the manipulation. This is that induction to get retail traders to buy into the uptrend, and also it is the stop hunt to stop out any retail traders that had their stop losses above this second leg, right? A lot of traders were selling in here, thinking that this was going to reverse, placing their stop losses above this high here, and what do you know? One more leg shoots up, hits the stops, and then completely reverses. All right, here's an example of consolidation, breakout to the highs, reverse, W formation off of the low, come London session, and then reverse off of that low. So where would that W formation second leg be? Well, this would be the first leg right here, and then this wick right here would be that second leg. After seeing this candlestick close, and then this green candlestick close right here like a railroad track, that is a confirmation to us to buy. Here's another example. Here we can see this is the previous day. We have consolidation, reversal, then we have the low of the day, low of Tuesday. Reverse off of that low, consolidate, break out of that consolidation, break past the low of the previous day, and this is your entry opportunity right here. You could see this as a macro W formation, where this would be the first leg, and then this is that second leg, inducing retail traders to sell. And what do you know? Come midweek, they reverse completely reverse against everyone that thought this was a continuation of a downtrend. Highs and lows, W formation off of the low. So here is another example, but this is the same example as we looked at previous, but this is on the 1 hour time frame. So here you can combine, see how similar the structure is, and you can use these larger time frame candlesticks as more of a confirmation to your entry as well. All right, highs and lows. So this is very special. This is one of my favorite entry setups, and it has a major risk to reward ratio. So it will occur off of the high or the low of the day. It only happens once per day, and it's not guaranteed to happen every single day. However, when it does happen, it is one of my favorite setups. So basically, it is a M or a W formation, and the M or the W, basically the first leg of the M or the W is created during London session. And then the second leg of the M or W, where they are inducing or using that second leg as a stop hunt past the first leg, this has to come in New York session. So that's basically the characteristic. We have one high being made London session, and then the next high where they're breaking past this previous high of London session occurs for New York session. Let's see some examples of this. So here's an example where we see an obvious uptrend. Then London session, they create this high right here. Then they reverse off of that high, stay in consolidation, and then within just 2 or 3 candlesticks, New York session occurs, and they're breaking past the high of the previous session, the high of London session. So this break past, this induction here was used to induce retail traders to buy, hit the stop losses of any potential sellers in this area, and then reverse the trend against them. This was over 120 pip reversal, and here you can see on the 1 hour time frame the candlesticks and how they look, comparing them to this, which looks to be the 15-minute time frame. So this is one of my favorite setups. This is one of my favorite high and low M or W formation setups. Candlesticks. What to look for when in the moment. What to look for when in the moment. So look for the volatility of the candlestick. You want to look at the movement of the candlestick, the timing of the candlesticks, and the candlesticks on higher or lower time frames. So here in this example, I combined this higher time frame, the 1 hour time frame, with the, I think it's the 15-minute time frame, and you can see how different the candlesticks look from the 15-minute time frame to the 1 hour time frame. On the 1 hour time frame, this is nothing but a wick past the previous high here, but on the 15-minute time frame, we can see multiple candles closing above the high, this previous high London session. Structure, what to look for. We're looking for highs and lows, liquidity zones, candlestick entry pattern, macro and micro structures, and reverse price action patterns. Here's a new example. We're going to identify the highs and lows in this example. We have this blue dotted line, which is the start of the day, remember? And then we have, off of this start of the day, we have a high, and then consolidation, and then it looks like in one candlestick right here, they spike up past that high, and then close a few candlesticks above that high. And then, what do you know? Complete reversal off of the high of the day, which was made in Asian session. Then, we can see this massive candlestick bringing us all the way back down here. And then we can see this low. So it looks like this is potentially the low of New York session. Excuse me, the low of London session. And then this right here looks like it's potentially the low of New York session, breaking past the low of London session. Let's see. All right, here it is. So London session, we have the high of the day, which is right here, and also the low. Currently, if we're looking at London session before New York session, we have this low right here. So this is the setup I was talking about that has a very high risk-reward ratio, where they create either the high or the low in London session, and then they work off of that high or low New York session. So this candlestick right here marks New York session, and you can see right into New York session, they spike into the lows right here of London session, and then completely reverse off of these lows. If we look at it, looking for M's and W's, we can see pretty obvious M formation right here, which this would be the first leg, and this would be the second leg, and then a very obvious W formation right here, this being the first leg, and this being the second leg come New York session. All right, here's another example. So in this example, we have London session. We're looking at, let's just say, Tuesday. If we're looking at Tuesday here, we have London session starting right here. And then New York session right around here. We have this M formation off of the high. Come New York session. We're working off of the high of London Asian session right around here. So this would be that first leg, second leg, reversal, bringing price down to these lows, and then a W formation off of the, what looks to be this trend line here. The lower trend line, W formation, reversal, and the day in consolidation. And then the next day basically repeats itself. Where we have London session, we have the high of London session right around here. And then New York session, they work off of that high. But take note that they're also working off of the high, not only of London Asian session and London session, but also the high of the previous day, which could potentially be the high of the week right here. This obviously would be creating a new high of the week. And then look at these candlesticks after this happened. 1, 2, 3, 4, 5. 5 red candlesticks completely reversing out of this zone. Here's a new example of the USD CAD on 1 hour time frame. Here we have Wednesday. It looks like Wednesday came to a low right here. the low of Wednesday. Consolidation. Come London session, spike past the low of the previous day and the lows of the day. And then you could say this is that W formation come midweek off of the lows of the week, and then a complete reversal off of these lows. So these are emotionally drained traders that are waiting in this consolidation, waiting for some type of move to break past this support. Then you can see it breaks past the support come London session. Support is now turned resistance. Traders start to sell, thinking that they're just going with the trend and they're going to make money. And then what happens? Completely reverses against them. So a lot of the traders that were buying this support were induced and had their stop losses hit by this one move come out of London session. This stop loss is being hit. This move also induced retail traders to start selling because they saw this support turn resistance and they're just following the trend. All right, another example, USD CAD 15-minute time frame. Whoops. So here we have London session. The low of London session is made right around here. And then New York session, you can see they work off of that low and then completely reverse come New York session. So here we're combining highs and lows and support and resistance and trend lines. Pretty obvious trend line here. Come London session, we have the low of London session, and then New York session breaks past that low of London session, and then we have that reversal. Here we're combining some more trend lines and support and resistance levels. This looks to be a uptrend. And then we have the high of this day here. And then the next day spends some time in consolidation and then spikes past the high of the previous day. This is London session, and then we can see that spike past the high of the previous day comes New York session, just in time for that New York session reversal off of the high. All right, here we have an entire day. So here is the start of the day indicated by this blue line, and then the end of the day indicated by this blue line. This red zone here would be the consolidation of Asian session. Asian session consolidation, multiple hours of consolidation here. And then come London, New York session, we have these sessions plotted out. London session, they break past the highs of Asian session. Notice during these session timings, London and New York session, they're always looking for new highs or new lows. Okay? So in this case, this would be the high of the day until we have London session breaking past this high of the day. Little M formation off of the high of the day right here to reverse. And then come New York session, they made the low of the day. This technically would be London session still right here. So this next candlestick would be New York session, and there is that opportunity as well to work off of the London session low for New York session. So this is that W formation off of the London session low come New York session, and a complete reversal come New York session past the highs of London session and ending the day in consolidation here. So you could say this is that M formation, and then here's that W formation here. Here's another example of a 15-minute time frame, 1 day. So here's the start, indicated by the blue line. Here's the end of the day, indicated by the blue line. We start the day in consolidation, and we've already plotted our trend lines and the support and resistance levels. Now we're plotting the session timing. So similarly to the previous example, we have the Asian session creating the high of the day, the initial high of the day, and then London session, we're spiking past that high of the day, inducing retail traders to buy, and then completely reverse against them. And then come here, we have London session, the low of London session right around here, and then come New York session, they're working off of that low of London session for the reversal off of that low to end the day in consolidation. If you've enjoyed up until this point, please give us a like and a subscribe, you guys. We really enjoy having this type of community and creating this content. So I'd like to see, if you guys continue to like and subscribe and enjoy the content, I'll continue pumping out this type of content. Alrighty, structure. So what do you see here? Well, first thing we can notice is the start of the day, the end of the previous day, start of the new day, consolidation right here. That's what I notice. I also notice it looks like the high right here, and this could be a second leg to this high. We might be in London session right around now. All right, yep, there it is. So here we have the previous day's high, and then here we have London session high of the day, and then New York session right around here. So what could we expect to happen just based off of this? Just based off of seeing this structure right here? Well, I would expect a massive reversal in trend. It looks like we have an uptrend here. It looks like we have a low, a high, a higher low, and a higher high is being made. That is characteristics of an uptrend. However, we have our confirmations as to why we believe this could be a reversal. And there we go. So I like to call this zone hopping. We have a different video on YouTube about zone hopping. But basically, here is a zone right here. Now, price was in this zone, inducing retail traders to buy, and then they hopped from this zone to a different zone, hopped completely out of this zone. So they completely shifted structure, and now price is under this, what you could call a support level, and it is now turned into a resistance level, completely outside of this one zone here. So what do we think could happen next? Well, something will happen. Price will most likely start to create a new zone to work inside of. So here's this zone up here, and then we could predict a new zone that price is going to start consolidating in. And there we go. So price went from up here in this price range and then shifted into this price range. Now, if you draw a little trend line here, we can see a high, a higher high, a higher high, higher high. So that's obviously a characteristic of an uptrend. However, we can also see, if we plot our trend line right here, we can see prices constantly pushing off of this trend line right here, this lower trend line. So they gave all of the traders here so much time to buy, and this is what I was saying previously. So I believe in the first lesson that I have in this video course, I said to you guys that we are taught to believe as traders that the more time price spends on a line or on a support or resistance level, that the stronger that level becomes. And that is completely the opposite, basically. The more time that price spends at any given price level, the more volume is going to be there and the more manipulation will occur. So this was obviously setting up people to buy at this level. Look at for how many hours that they just consolidated at this level. They wanted people, as many people as possible, to buy into this and then completely reversed it. So we're going to go into combining confirmations. So otherwise known as confirmation stacking. In this case, we have higher highs forming. We have a clear Asian consolidation. We have a clear high of the day come London session. We have a clear second leg high of the day, New York session, right here. Number 5, we have a candlestick confirmation railroad track, right here, pretty obvious. And then number 6, we have an extended time working the trend line, accumulating liquidity. So we have an extended amount of time where price is just continuously allowing the majority of people to buy at this price level. That's not normal. If price was actually going to skyrocket from here and push up, they would have pushed up from this point right here, and they would have just pushed past these highs. But what happened? They allowed as much time as possible for people to start buying off of this trend line here. So, boom, buy. Oh, you can buy here again, buy again, buy again. And they're just accumulating liquidity, as many buyers as possible, and then completely shifting the market against those buyers, hitting as many stop losses as possible. So I believe we already went over the candlestick anatomy. Yep, already went over this. Beautiful. Alrighty. So now we're going over a little bit of market structure. So this is a macro, what I like to call the signature trade, where they come to a, there's a trend, they come to a high, reverse off of that high, and then create a point, break out of that point, targeting the high, and then reversing off of that high. We can see the confirmation candlestick right here, very obvious, coming out of New York session. And then the take profit would be right around 100 to 200 pips, as this is a macro example. Here's another example of my market structure. I've plotted the trend lines. The support and resistance levels have been plotted as well. And here I'm plotting the point, or this wedge coming to the point to break out. And here is that previous low. And then here is that breakout past that previous low for the W formation. And then take profit zone would be right around 100 pips. Take profit zone number 2, 160 pips. We'll go over how to plot take profit zones in the coming videos, so don't worry about that. Alrighty, hope you guys enjoyed, and on to the next one. Peace.